What is going on, investors? Hopefully, you guys are doing well out there. That is right. It is Friday. The weekend is here, and it's time to kick your feet back and watch the Investor Channel recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. We'll kick things off this week like we always do with Meta Platforms. Start of the week at 287. This stock continuing to drift higher, up about 1% to finish the week close to $290 per share. Instagram launches a, quote, Twitter killer Threads app. I was able to just sign up for it very quickly. I didn't post anything, but the sign up process, as you would expect, a company of Meta's size and their experience with this type of thing, very easy. A lot of your followers and the people that you follow, easy to kind of transfer that over to the two apps. What I will say is a lot of the hyperbole around the app and its usage probably going to be slanted towards kind of Twitter killer, Twitter hate. You know, the media is out to get Elon Musk, and some of this is his own doing. And same with Twitter. People like to kind of beat it up and trash it. So we'll see what happens with this thread app. Now, that we have gotten some anecdotal data coming in, the fact that the app surpassed 70 million users and that, quote, exceeded expectations. Now, we'll obviously see how high this has to ramp, because if you look across social media, how many really awesome social media sites out there have 70 million users? You know, you really have to get up to like closer to 700 million users to really have something that's very significant. And then also, we also have to keep this in context with Meta, that is like a $750 billion company. They simply just it'd be like Google Plus if this thing doesn't scale past a couple 100 million users, certainly active users as well. Like I said, I'm probably counted in this user number. I didn't post anything. I haven't checked in on the app. I don't have high hopes for this, but what I do like is that Meta is trying something. They're trying to innovate. They're trying to product offering, and we'll certainly keep an eye on how that goes. Now, Twitter threatens to sue Meta over that Threads app launch. We'll see if this lawsuit has any merit. Look, I'm not a lawyer. I can't really tell you if it does. Apparently, Meta has been poaching employees that were essentially let go or fired from Twitter. I don't know if they had non-competes, which has certainly been coming under fire from a legal perspective as well. I don't know if there's actual design patents when it relates to Twitter. There's a lot of copycat apps and copycats of Twitter. I think Twitter's best thing to do here is to compete on features, compete on size, and that is how you would win something like that. Now, Meta Platforms could have a $925 million tax bill from Italy after an assessment. This after an internal audit claimed that Meta's user registrations may have been a taxable event. So if you just signed up to use Meta, Meta has to actually pay Italy taxes on that. Wouldn't you love to be one of these regulators to just go pick out one of these big tech companies and say, you owe us $925 million, and, then bring Meta to the table and they'll negotiate this number down, and the lawyers will have a field day with that. Now, the most important news that you will have on today's show and for the rest of your weekend is Elon Musk may face off with Mark Zuckerberg in the ring as soon as August. That is according to the president of the UFC, Dana White, and that the two CEOs, Musk being 52 years old, Zuckerberg being a spry 39 years old, have been negotiating and getting closer to the details of the fight. I couldn't be more excited about something like this going on. I've been talking to some of my friends and stuff. Like, something like this comes around probably once in a lifetime for you. The Super Bowl comes every year. Your team making the NBA Finals might not happen that often, depending on who you root for. But this type of thing seems like it's a once in a lifetime type event. And so my plan is, if these two fight, I certainly would love to get into the arena. Things tend to be expensive. This certainly would probably be maybe slightly out of my price range when it comes to a sporting event. If it's not, but the plan is, I plan to be in Las Vegas, Nevada. If and when this fight goes down, we'll have an unofficial meetup from the Investor Channel fans and crews in Las Vegas. Anybody in the area or anybody that wants to attend the event, make sure you get a hold of me. We'll have an unofficial meetup if Elon and Mark battle it out in Las Vegas. Moving on to Apple, start of the week at 193, slipped down about 1.2%. Finish the week, we'll just call that $191 per share. Apple said to tread carefully with the Vision Pro and have appointment-only launch. So what they're going to do, you have to have your own appointment. Apparently, they did this when the Apple Watch initially released. They made sure you had an appointment, probably to, maybe reduce the number of returns, reduce the number of customer service calls, reduce maybe some negative feedback that the device may get if you buy it and you don't even really know what's going on. Now, in certain markets, they're going to have certain segments of the Apple Store strictly devoted to the Apple Vision Pro, and you're maybe going to be able to sit down and maybe try it out, and they're going to have things for you to do here. But it certainly looks like, to me, Apple is trying to kind of tap down the expectations when it comes to this as they slash the Vision Pro targets amid production woes. Obviously, a lot of these parts look really expensive and really cool from just a kind of an engineering standpoint, and it looks like Apple's suppliers are having trouble kind of delivering these, particularly the displays inside the lenses. From what I was reading, those displays from like just a mass production perspective, not even really readily available right now. So Apple's really pushing the envelope when it comes to this Vision Pro. My take is it's going to be a niche product. It's going to be a rounding error on their financials. It'll be cool. I certainly want to put one on. I certainly don't want to pay $3,500 to buy one, but if I get a chance to put one on, I'll probably put it on. But in terms of actually buying one and using it on a daily basis, I actually think the use cases are going to be small for that. Moving on to Amazon. This stock started the week at 131, slid down by about 1% to finish the week, pretty darn close to $130. Now, Amazon CEO Andy Jassy is confident on its delivery upside ahead of Prime Day. In just 4 days, starting on July 11th and 12th, you'll have the annual event of Prime Day, which is 6 months conveniently, or roughly 6 months before Christmas. Andy Jassy noted that the fact is they're starting to deliver packages a little bit faster. There's less delays. Certainly as a consumer of Amazon, I just got a big box dropped off at my door. Things are showing up, more in reasonable time. And sometimes you can get on there and get something delivered either the same day or oftentimes the very next day. For a while there, it was a little hit or miss. And obviously some of that had to do with the pandemic and those types of issues. And just obviously as a seller on Amazon, it has helped as they've reached better delivery times. You tend to notice your sales go up, and then you also get less returns because somebody can return something if Amazon doesn't hit their delivery promise. And I've noticed that return rate's gone down a little bit. iRobot, the company, the robot vacuum maker that Amazon is trying to acquire for roughly $1.65 billion. Looks like that acquisition is going to get an in-depth EU review. Doesn't surprise me anything that these companies do. These companies could come over to my house and try to buy a used rug, and these regulators would probably want to look into it. Pinterest, Amazon partnership is live earlier than expected. I think we talked about this either last week or the year before. The two companies have combined more or less. This is more or less like an advertising partnership. It's more or less like an affiliate agreement or something like that. Amazon is going to be showing some content on Pinterest. Pinterest probably has a certain inventory of ads that they want to, load up onto their site and in front of customers' eyes, and they're simply using Amazon. I think it's probably going to be a good partnership for both sides. Now, major Amazon case by the FTC likely misunderstands, in quotes, by the tech giant's success and product lines. That's according to Baird. Now, I actually think Baird might be misunderstanding the FTC's case, and I could be misunderstanding. So I don't want to accuse another analyst of maybe not understanding. My understanding is the FTC, and look, the FTC might decide to roll up a much larger kind of quote antitrust case into Amazon that looks into their e-commerce business, their delivery business, maybe their AWS business. There's a lot of businesses that Amazon does, and I think that they could, they could do whatever they want. It doesn't mean they're going to win in court. In fact, their odds of winning a lot of those cases are pretty slim. That's what Baird is saying. But where I do think the FTC does have a case is in the details of this, at least in the kind of the leaked rumors. is the FTC is going after Amazon for manipulating the buy box. So when you're on an Amazon site and you click buy, oftentimes it's not the lowest price, and they are simply putting the seller that is using their fulfillment by Amazon, their warehouses, maybe even their advertising services, they're putting that price in the buy box. Oftentimes there are lower prices. You have to almost click below the listing to find the lower price, but that might come from a seller's own warehouse or their own fulfillment center. Shoot, it might even come out of my garage. And it's long been a complaint of people for Amazon. The other complaint that I hear is you start a brand. So let's just say you make coasters and you start selling this coaster on Amazon. Amazon obviously has insight into how many you're selling and how often you sell them and probably your profit margins. And then guess what? Amazon then makes their own Amazon basic coaster that knocks off yours, and then they move up in the search rankings, and then all of a sudden your sales go to crap. And so I actually think the FTC has I don't know if they'll win that in court, but that is a common complaint I hear from Amazon sellers when I go to conferences and just read that type of stuff online. Moving on to Netflix, start of the week at $4.35, end of the week just fractionally at about $438 per share. Netflix said to be increasing their targeting and creating enhanced formats to boost their ad sales. What they're trying to do is create ad campaigns and encourage advertisers to maybe create kind of like, quote, episodic type commercials where maybe the first commercial is almost like the setup for the second commercial and the third commercial. Occasionally you see these types of ad campaigns. I think they would work very well on Netflix. And look, I love what Netflix is doing. Okay, this time last year, they didn't even have an ad product. And now they're rolling these out and they're trying to innovate. They're innovating in the best way they can, but they're bringing a better experience to their users. I don't own Netflix. I don't own any of these companies, but I really respect Netflix from kind of an innovation standpoint, or in their case, maybe like an iteration standpoint, and just the way they do it. I really respect that. Netflix rose earlier in the week as Goldman Sachs upgrades ahead of their Q2 results. We're on like earnings eve over here, guys. It's going to get really exciting here on the channel. Netflix slated to report their second quarter results on July 19th. I'll give you the dates of all of these companies' earnings reports when we get to the technical segment of the show. But before we get that, we got to talk about NVIDIA. Start of the week at $427, end of the week down just fractionally. Finished the week close to $425 per share. Time is on China's side in the chip war. That is according to analyst Jeffries. Talked about this on last week's show. The fact that you had the Biden administration essentially creating some export bans and restrictions on certain NVIDIA chips, the lithography machines, TSM being able to have China as a customer. The rumors that we saw this week was that they might be able to shut down the cloud providers like Amazon and Microsoft and Google from selling cloud services into China. And it might actually ban the sales of the A800 AI GPU chip that NVIDIA makes, essentially a modified version of their top-end chip. They've been selling that into China, and China has been buying a boatload of them. Well, I actually think from a standpoint, the stock, and I'm talking about NVIDIA here, if we get more restrictions and just an outright ban, you can't even, send any of this to the country of China, I think initially the stock might sell off in that news. But I think what investors will find out is there's so much domestic demand for NVIDIA's product. And this is the great thing about having a near monopoly in the business that you're in, which is NVIDIA's situation, where they have the best GPU, they have the best software, and they have the best networking cables to kind of link them all together. They have the complete system, and there's nobody else really in the ballpark, especially if you're trying to buy tens of thousands of these things. I think NVIDIA is going to be fine no matter what happens there. Now, moving on to Google, start of the week at 119, end of the week flat to finish the week at 119. Google reportedly delaying their first customized smartphone chip until 2025. And I'm going to do some speculating here. We don't always like to speculate. Maybe I do, but we are going to speculate here. Now, so the tech giant initially released maybe a 2024, and Google's taking the route of Apple, where every chip inside of an Apple device is custom silicon to Apple. Now, they license from ARM, a company that NVIDIA actually tried to purchase just a couple of years ago. ARM is set to go public. Likely, if the markets stay the where they're at, it'll probably go public by the end of this year. Google is usually working with Samsung, and they're likely licensing some piece of that technology from ARM. Now, the way the chip business works is you either license something from Intel/AMD, which is the x86 processor, or you license something from ARM. Now, x86 is in virtually every computer you have other than Apple, and then it's in almost every server chip as well. These are basically all your general purpose CPU chips. Now, inside of your smartphone is something that is licensed through ARM, and so these companies collect a licensing fee. But what is interesting is I was at a conference last week, and if you've been following me over at Brownstone Research, my Bleeding Edge newsletter, you can subscribe via email. You can also just go to brownstoneresearch.com and find my daily post. As I was in San Jose about a week ago, there is something actually called RISC-V, which is really the number one option if you're looking for an open source where you're not licensing something from Intel, you're not licensing something from ARM. You can actually go with RISC-V, and the piece that is holding RISC-V back is actually software. Its instruction set, certainly in mobile phones and probably PCs as well, probably very much competes with x86 and ARM. What's holding it back is kind of the instruction set of software, and Google is reportedly working on software to allow Android to work with RISC-V. So my speculation is Google is delaying their first customized smartphone chip until 2025 because they need to get the software right first. They are going to pair that with a RISC-V chip, which will do two things for Google. Number one, means they don't have to pay a licensing fee to ARM. The other thing that it does, it gives them a differentiating product. Every other smartphone runs on ARM. If Google can do it on RISC-V architecture, they might be able to create a product that is maybe even better than the ARM architecture. We'll see what happens there. But again, you can go to brownstoneresearch.com, read some of that type of research. Moving on to Microsoft. Started the week at 339, down about 0.5%. Finished the week, we'll call that 337 and some change. Microsoft could top a $3 trillion valuation thanks to generative AI pole position. Company certainly, is I guess a 500 million, a stone's thrown away, but they're about a $2.5 trillion market cap. I comfortably see Microsoft crossing 3 trillion as the years go on. Moving on to Tesla. Started the week at 279, drifted lower after initial pop earlier in the week to finish the week close to, we'll just call that 275, I guess. Now, earlier in the week, this was on the weekend into the early trading day on Monday, Tesla confirmed a new record of deliveries and it beat expectations. Estimates were for 445,000 units. The company delivered 466,000 units, producing nearly 480,000 cars in the most recent quarter. Tesla certainly showing that demand is still relatively strong. Moving over to the technical segment of the show, we'll kick things off with the S&P 500. Shortened trading week. You had a shortened Monday trade. You have no trade on Tuesday. A lot of people probably took the week off, quite frankly. Now, here's my hope for the S&P 500 is if actually we could start going sideways. Now, the odds of that happening, considering earnings are starting next week. I believe next Friday we have JP Morgan, maybe Wells Fargo, one of the other major banks reports next Friday, which we'll cover here on the channel. Ideally, particularly for those of you that have been on the sidelines for most of this year, be ideal if the stock market could go sideways. Now, the odds of that happening, I don't know. I can't really tell you. The other likely event is that earnings kind of suck or they're just not motivating enough. The outlook's bad, whatever. Maybe some macro stuff pops up and the stock market pulls back. You could see a decent pullback in the stock market, maybe a pullback kind of in that 5 to 6% range. But that would simply be a continuation of really the uptrend that we've been in, I would say really since December. It officially kind of bottomed in October, but really the beginning of the year, you've been kind of moving higher on the stock market. We'll certainly be here to monitor that going forward. Moving over to Meta. Meta reports their earnings on the 26th. So we're just 19 days away from hearing from Meta. The stock clearly setting up at the top of just an absolute epic rally. That's not even off the lows. This thing is up 175%. It's actually up even more than that. What would be absolutely fantastic is if these stocks can take a little bit of a breath. These breaths can probably be bought. Moving on to Apple. This company reports their earnings not until next month. So you have till August 3rd, it looks like, when we'll hear from Apple. This stock is still in this massive uptrend. Once you get over these highs, talked about this numerous times, there's just no precedent for selling the stock over the highs. So these things tend to run. You tend to, when you move to new highs, you tend to attract more sellers, or excuse me, you tend to attract more buyers than you do sellers. When the sellers emerge, you're looking for a pullback back to the highs. Probably the first area where if you feel like you need to add more to your Apple position, it's probably the first area I would look to. Now, moving on to Amazon. Still looking good. Looks like it's run out of steam a little bit. There's this area that we've marked out for a long time on the low end. It's right here at 134. So just a couple of dollars higher than where the stock is. Little bit higher up. It's probably like 145. So between 135 and 145, that's where Amazon's going to have a little trouble kind of churning through this. Now, this company reports their earnings on July 27th. So we got about 20 days to go before we hear from Amazon. Moving on to Netflix. Didn't get any closer to closing this gap between 455 up to about 500. It looks like that's where the stock wants to go. Complicating the situation a little bit is this is one of the first companies to report their earnings. They will do so on July 19th, just 12 days from now. I would recommend when a company is this close to earnings, we're talking about just 12 days away. I know it's tempting to jump in here and try to play, expert trader. Just wait, because you will either get confirmation to the upside on a stock like this, or it'll disappoint and you'll get confirmation to the downside. And there's a lot of areas down here to the downside that just makes more sense from a technical perspective. And even if you have this move to the upside, you have like a large amount of sideways consolidation here between like 500 and 550. It's going to be tough for the stock to really chew its way through that without some just exceptional results. And so I would just wait on the side. I would honestly be on the sidelines for most of these stocks since they're all about a month from reporting. Now, the one stock that is not close to reporting their earnings, NVIDIA, obviously tends to be a little bit later. I have this stock reporting their earnings on August 23rd, still just hanging out at the top of a range. Investors probably are correctly assuming that NVIDIA's earnings estimates for the upcoming quarter, first of all, I think they're going to knock it out of the park. I think they guided for maybe it was $11 billion in revenue. Wouldn't surprise me if they get actually maybe into the teens, which would just be an absolute blowout quarter. And I think what investors are probably correctly assuming is whatever the revenue is in this upcoming quarter for NVIDIA, AI is just getting hotter and hotter, and the demand for it seems to just continuing to go up, and NVIDIA basically has no competition. You could actually see another beat and raise from NVIDIA in the upcoming quarter, as crazy as that sounds. Now, moving on to Google. This company reports their earnings on the 25th. Will be very busy, the third week of this month. Talked about it on last week's show. Looks like this one bent a little bit at the end. This is certainly a topping pattern, consolidating here in the 110, 120 range. Pullbacks in Google, I think, can be purchased. Moving on to Microsoft. This company starts their earnings report on the 27th. Also looks like the stock, it hasn't run out of steam yet, but having trouble really pushing over these highs here. Obviously could certainly pull an Apple, and once you get really over these highs up here at about 350, you get above 350, you're probably drifting up to, I don't know, 375, 380 on this stock. You get rejected at these levels. First area that's interesting is 317. Lower, obviously, we'll talk about that as it emerges. Moving on to Tesla. This one is still on one of those SpaceX rocket ships. It did create a gap in the chart this week as the company reported those better than expected delivery numbers. The stock gapped up really to make another higher high. Wouldn't surprise me if the stock wants to walk back, fill that gap. A further pullback in Tesla probably certainly can be bought. Pretty likely from a technical perspective, and it's hard to draw this technical line in. but you're probably going to want to back test that. That would take you back into like the 200, 210s on Tesla. When it comes to earnings, this company reports their earnings just 12 days from now on July 19th. We'll be here on the channel to cover that for you all. I hope you all have a very safe and fun weekend. We'll be back next week. Get excited, folks, because it is the start of earnings season. We've gotten the major banks. I know JP Morgan, off the top of my head, I believe is Friday. Don't quote me on any of it. It is Friday. It was a long week for me. But we have major banks next week, and I will bring those to you as quickly as I possibly can. Now, because of my employment and research that I do, maybe I don't get to post JP Morgan first thing in the morning, but it's something that I can do later in the day. My work is great because I'm out here on the West Coast and almost everybody I work with is on the East Coast. And so naturally, right around 1 o'clock, 2 o'clock, 3 o'clock in the afternoon, my time, everybody's, it's 6 o'clock. They're eating dinner where they're at. And so it gives me some freedom to get these videos out to you. Not only that, I get a ton of lessons from these videos, not only from doing the videos myself, but probably more importantly, in the comments below. Feel free to give me a comment anytime, any place. I love to hear your feedback. Until next time, folks, we'll see you again next week. Be safe this weekend. Good luck with your investments.